Hi, everyone. I'm here with Stephen Ehrlich, executive editor of Unchained. Welcome, Stephen.
Yeah. Hey, Laura.
So this week you published a story about a DAT called ZeroStack, and the findings of your investigation were a little bit eye-popping. Go ahead and explain what it is that you discovered about the stat.
In the world of DATs, especially since we're now moving away from the Bitcoin and Solana and Ether ones into longer tail assets, ears perk up for signs of, I guess, like marketing tricks, accounting tricks, essentially ways that projects and companies try to make their fundraisers appear to be more successful than they actually are. We were given a tip to look at this project in particular. We actually got a copy of the investor deck that is sent to potential PIPE investors. And one of the things that really stood out to us right away was that the vast majority of the money that was being contributed into this DAT, and they actually launched about last week or so with a big top line number saying that they raised $401 million. It turned out that over 300 million of that came from tokens, zero G tokens that are sort of the native token for a blockchain focused on AI called Zero Gravity, that were donated essentially by the founding team, which already is a red flag. Two, the blockchain had not even launched yet when they created all of this. That's a first in this digital asset treasury world. But I think what really stood out first, and we can get into some of the other red flags a little bit later, was that of the $401 million that was ostensibly invested, only 13.7 million actually came in new cash from new investors. The balance came from about $22.8 million worth of Solana in-kind tokens from another DAT company called the DeFi Development Corporation, essentially almost recycling those tokens. I don't know if now both projects are claiming they have those tokens on their balance sheet. That might be something worth looking into further on, but those were sort of given to this ZeroStack company. It's going to pay an 8% APR with a convertibility feature for DeFi Development Corp. So they're basically getting sort of like a free call option on this DAT stock if it does go up. But really, the top finding we found is that they said that they raised $401 million. But in actuality, the real number of new money that came in unencumbered was only 13.7 million, which was about 3%, a little over 3% of what they claimed they had brought in.
Yeah, I mean, when you kind of broke down all the various buckets of money, then it was very clear that, yeah, this was not really new money, except for that 13.7 million. You also spoke to a number of investors, and they said that this deck raised a number of red flags aside from the accounting gimmicks. What were those red flags?
So, I mean, flag number one, I already alluded to it once. The fact that this was a treasury company that was sort of focused on a blockchain that just went live on mainnet. Blockchains, by the very definition, are already pretty experimental and very risky investments. Anyone in this industry that takes themselves seriously would say that, even for Bitcoin or Ethereum or Solana. But this was already risky. Two, the decentralized AI sort of ecosystem, which is about a $20 to $25 billion sort of vertical right now, is still at its infancy. And they're trying to compete with the likes of OpenAI and et cetera. So risk number two. But then again, the fact that the biggest risk and the biggest red flag that really came out of this is that multiple people told me this seemed to be almost a loophole for these founders to get immediate liquidity for their tokens. And that's not something that's supposed to happen. As many people listening here probably know, often like founder tokens, early investor tokens are subject to lockups. It's almost like putting those tokens in escrow where they might vest after a 1-year cliff and then quarterly or monthly or whatever. And they serve the dual purpose of constricting supply in order to keep token prices potentially higher. And then two, keeping the teams, the key individuals engaged in the projects over the long term. They want to align incentives. But the tokens that these founders were putting into this DAT were locked, but in exchange, they're getting shares issued against those tokens that will become immediately liquid as soon as those tokens get registered with the SEC. So they're not going to have to wait years for liquidity. They could theoretically sell in as little as 3 to 6 months. And that was another major red flag that one industry expert that has looked at dozens, perhaps more than 100 of these DAT decks, said that that was something that the industry needs to fix. I've done, as you know, Laura, I've done many reports and investigations into DATs over the last few months, and the ones that are more responsible, they put out in their investor presentations that founder shares, founder tokens, like that type of stuff, will be locked up for periods of time, 3, 6, sometimes a full year, to sort of calm investor fears. In this particular deck, there was nothing of that sort. I didn't see anything in any of the SEC filings. And when I reached out to ZeroStack and representatives for comment on the story before we published, I did not receive a response.
And what happened to the token after the DAT launched? Or not the token, the stock?
Well, the stock, everything has been going down. I mean, the token first launched, I guess it was the 21st of September or so. The token is down about 53% since then. So that already highlights the riskiness of it. It's actually down about 30% since we published the story yesterday. The stock is down about, I think, 22% or so, and 7% so far today. So again, and this actually leads to red flag number 2 that was pointed out to me as well. Zero G has a circulating supply, or a total supply, I guess, of 1 billion tokens. And for a project that's brand new and a token that is not trading, how do you come up with a price? The reason that these insiders were able to put quote unquote $300+ million into the debt was because, and it actually said this in the SEC filing, the company and the token holders basically came to an agreement that they're going to price the tokens at $3 each. That essentially gives a project for a blockchain that, again, has not launched yet, or at that point had not launched, it launched 2 days later, a $3 billion fully diluted valuation. And it certainly seems like there could be some insider dealings happening here, because the company and the token holders, they would be aligned. They'd want the tokens to trade well. $3 is a nice number. So they basically agreed. To price them at this amount, and away we go. I actually spoke to a couple of experts to get a sense of whether or not there was any funny business going on when the token actually began to trade, working with market makers or any sort of like uneconomic type wash trading to maintain the price. I was told that there were no telltale signs of that from initial price charts on Binance and BitGet, which were the 2 big exchanges it started trading on. But again, the price has consistently gone down, down, down since it began trading. And that $3 price point, if it can't get back to it quickly, it might look a little ridiculous in a couple months' time.
And so, how would you say this whole story fits into the current DAT environment?
Again, it just that's our that's they had their moment. I'm not going to suggest that they're going to go away, but now we're looking at froth. I mean, one investor I spoke to said that all the serious investors are pencils down at this moment. Like a lot of the smart money got in the spring, early summer, and now we're seeing a lot of the copycats, the ones that are trying to find that pocket of, I guess, hype that they can profit off of. Oftentimes, that involves moving into what we call like the long tail assets, the ones that are not as well known, the ones where there's not as much competition in the DAT space. And if you can try to catch fire, great. I mean, there's actually another DAT focused on an AI blockchain called Interactive Strength that we wrote about a few months ago. And that one has just been completely tanking. It was tanking before it turned itself into a DAT treasury for this FET token, but it stayed that way. So there's going to be a lot of this coming up. And I guess for me, it's just another example of maybe this is calling the top a little bit, and we're going to move into a period of perhaps some consolidation. I know we're seeing a lot of DATs now engaging in stock buybacks as a way to sort of, I don't know if artificially is the right word, but as a way to support the price, especially as some of the MNAVs are starting to, especially now as some of the MNAVs are starting to drop, sometimes below 1. Like for instance, Vivek Ramaswamy's group Strive actually recently purchased Semler Scientific, which had been a bit of a beleaguered Bitcoin treasury company that's also a medical device firm. So I think we're going to continue to see these are the big trends I think we're going to see. We were making a joke, I think, Laura, that I was talking to somebody, it might have been you, that all the investment banking firms that made money sort of brokering these DAT deals are now going to make money um, sort of speed being matchmakers and opening speed dating events between the different DAT companies as they try to consolidate and build stronger balance sheets.
Yeah, honestly, this whole thing about how they launched the DAT even before the blockchain went live, like it's just giving me kind of peak 2017 ICO mania or even 2018 when it was like full on just scams at that point. All right, so what do you think investors should do when they're evaluating these DATs to protect themselves?
Yeah, the most important thing that investors can do is really just make sure you read the fine print. Like if anyone Googles ZeroStack or anything surrounding this particular DAT, you'll see a series of articles from the crypto press and also some mainstream financial outlets touting this $401 million raise. And if you don't read anything else, you'll be like, oh, $400 million AI blockchain. That sounds pretty good. And again, like we wrote the story, we're not accusing anyone of like fraud or doing something illegal, but it's really important to read SEC filings, read fine print, so you understand exactly how much money is being put into these things and what are the potential conflicts of interest or risk factors that aren't going to be immediately apparent or displayed through press releases and other articles. Frankly, it didn't take super long for us to read these and realize that the actual amount of money put in was a little over $13.7 million. So like it's just really important again to always do your own research, especially during times like this where again we might be reaching a bit of a market top in terms of the hype train when it comes to these DATs. And when we're talking about projects and blockchains that are still very new and experimental, it's all the more important to do that work. The one other thing I would point out though is again, uh, I know people. There are some people I spoke to, and this didn't quite make it into the article, that are trying to disassociate the zero G blockchain or the zero gravity blockchain from the DAT itself. The DAT has some very peculiar economics, for lack of a better term, but there are some people that still think that the zero gravity blockchain, if you take out the DAT and just look at it as an early experimental type of AI focused blockchain could still be successful. But they certainly they seem to think that some of its reputation is tainted by a little bit of the insider dealing from the founders that are putting money into the stat, and then again the some of the revelations from our story that we ran by them.
Yeah. By the way, you said that the actual cash raise was a little over 13.7, but it was a little under 13.7 million. It was 13.66. So, yeah, from 401 million that they claimed to 13.66 million. Um, eyebrow raising story. Thanks so much for your work, Steve, on uncovering that so people can kind of learn more about this world and hopefully put their money in vehicles that don't have kind of like these accounting tricks and whatever in them. Thanks so
Thanks, Laura.
much.